Hi, we're auditing Amazon.com. I'm Jessica.
I'm Ivana.
I'm Nathan.
I'm Dafa.
I'm Theodore.
We've used the financials for Amazon.com for December 31st, 2018. Amazon is a multinational e-commerce company with departments in cloud computing, artificial intelligence, hardware, and software. Their services sales department is also comprised of Amazon Marketplace, which features products sold by outside sellers who pay commissions to Amazon.com. Amazon's recent valuation of $1 trillion and significant revenue growth over the last year makes them the largest e-commerce company. Subsidiary companies of Amazon include Audible, Zappos, Goodreads, Amazon Web Services, Whole Foods Market, and Twitch TV. As the largest internet company in the world, Amazon offers customers Prime membership, which gains customers savings and Amazon loyalty. Understanding the diversity of Amazon.com, its products, services, and customers will benefit us as an audit team for the procedures and evaluation. Nava?
Yes, so Amazon has many risks that could affect the financial statements, but our audit team identified 3 potential risks to the financial statements. First, Amazon has many competitors in different industries. This creates regional and local competitors might have advantage of brand image, secured contracts with vendors, specialization of services and products, and higher quality infrastructure. This poses the risk of missed opportunities, overpriced raw materials, and potentially locals could boycott Amazon services and products. The second risk we considered was that Amazon's growth rate. Amazon has been growing rapidly in the last 20 years, so they have very complex environment. So the ability to forecast and report the financial statements is a risk to Amazon, and they have over 600,000 employees worldwide. And also Amazon acquired Whole Foods in last year in August, so the integration of financial statements could potentially create a risk because of the difference in accounting standards and reporting. And then the third risk we considered was continuous innovation. This risk goes along with Amazon's growth rate. Amazon might not be able to accurately forecast their growth rate. And then when there's an economic downturn, they might not be able to adjust their expenses accordingly with the changing in sales amount. And so we used the benchmark of 5% of total revenue to calculate materiality, which resulted in 11.64 million. And we also used 5% to calculate the tolerable misstatement, which brings the amount to 582,000. Theodore?
So to do the risk assessment, we decided to first of all see which accounts were significant or not to our audit. We realized that most accounts beside treasury stock are significant to our audit, since treasury stock did not change from 2017 to 2018. To do our risk assessment, we decided to compare the numbers from each account from 2017 to 2018 using a flux analysis and a vertical analysis. Every account that has a change of 5% over the years 2017 and 2018 will be in our scope for the flux analysis. Using the vertical analysis, every account that will have a change of 1% will be in our scope from 2017 to 2018. the most significant changes using the flux analysis will be in other expenses as well in total revenue. We believe that we had an increase in total revenue of 35% from 2017 to 2018 due to the newer markets that Amazon entered. On the other hand, we had a decrease of 700% in other expenses. According to Amazon 10K, other expenses is related to the expense of newer technologies towards products that they already developed. When we looked at our flux analysis, vertical analysis, we see that most of the accounts did growth in relation to the revenue from year 2017 to year 2018. The account, we could see a decrease in total liabilities in comparison with total revenue. This is the biggest decrease from 2017 to 2018. We believe once more that this is due to the decrease in other expenses. From here, I'll give you to Nathan, who will continue the presentation with thoughts.
Okay, so our audit team brainstormed and identified a couple potential areas that may incentivize the potential for fraud. Per the 2018 10K of Amazon, the company even suggests that after an evaluation of their internal control that they're not even able to accurately identify any potential fraudulent activity, and we believe this is due to Amazon's complex business environment in addition to the rapid growth. Additionally, the rapid growth of Amazon presents a concern for incentive for fraud. Namely, Amazon executives may be incentivized or pressured to fabricate false revenues to continue the rapid growth trend. We feel that revenue should be carefully analyzed to determine any potential fraudulent activity at the executive level. Additionally, Amazon, there's news reporting that Amazon is currently investing in suspected internal leaks of confidential information by employees in exchange of bribes. These activities include giving personal information to external entities, removing bad reviews, creating good reviews, fake vendors, banning established vendors. These activities are against the core ethical values of Amazon, which is facing issues in newer markets such as China and India. We also identified some opportunities to commit fraud. One area is the sellers program. Sellers might collect payments fraudulently, intentionally mislead customers with false product descriptions, sell unlawful counterfeit goods, pirated, stolen goods, anything unethical in that manner. And through the sellers program, since many of those are third-party vendors, Amazon's control might be a little less or a little weaker due to that, due to the nature of the sellers program. Shifting to a more internal focus, the opportunity for employee fraud, we feel could come from estimates and valuations of assets, liabilities, revenues, and expenses. If material, these estimates and valuation methods can lead to the statement of financial statements, which could potentially lead to overstating or understating any several accounts, including net income. Employee fraud could arise from lack of internal control procedures, such as segregation of duties, accounting system, access controls, passwords, things like that, approval authority requirements, periodic reconciliations, and internal auditing. Over to preliminary assessment of the risk of material misstatement for significant accounts identified by Theodore earlier. We've set the risk of material misstatement overall to be fairly high, just because of the rapid growth and always increasing high rates of growth of Amazon. We just feel that we need to verify primarily the existence and valuation of those accounts to feel comfortable provide an accurate audit opinion. And now I will shift it over to Ivana.
Thank you. Some of the accounts that we did look at and planned some substantive procedures to reduce the risk of material misstatement were inventory and property and equipment, accounts payable, accrued expenses, and cash equivalents. As for inventory, we're looking at the risk of material misstatement for valuation of the inventories. That is a high risk. Amazon has several distribution centers multinationally, and we decided we'll select a sample of these distribution centers to those that have a significant amount of inventory to test for valuation. We'll do tests such as cutoff to make sure that inventory wasn't received or shipped prior to the physical count of inventory. And we'll observe how inventory is counted. We'll observe how they do their physical count. We'll also ask for confirmation of inventory from any warehouse we choose. These warehouses we choose should be with a significant amount of inventory as well. Other tests we can apply to inventory valuation is to reconcile the inventory count to the general ledger and test high value items. We will also test for inventory in transit, and we'll review freight costs, and we'll also test for lower of cost or market value to really implement the valuation of inventory. As for property and equipment, we found that the risk of material misstatement for existent is high, and ways of testing the risk of material misstatement for property and equipment includes documentation and comparing to the general ledger. We're going to test for existence. We want to test for claimed additions by vouching property additions to relating invoices, and review any new or existing lease agreements. As for accounts payable, the risk of material misstatement for completeness is what we found high, and to test for this, we will apply a variety of procedures. We'll start with reconciling liabilities with monthly statements from creditors or other third parties, and we will confirm payables with vendors and other third parties, and search for any unrecorded payables to ensure completeness. We'll also review and verify any debt forgiveness and past payables to ensure that they are no longer an obligation to Amazon. As for accrued expenses, we found that the risk of material misstatement is high for rights and obligations, and basically with this we'll look for documentation and verify with third parties as well as with vendors. We'll make sure there is no duplicate accounts and look at agreements again, look at salaries of employees, and look at other high expenses and make sure there's documentation to verify those. As for cash and cash equivalents, Amazon has recently reclassified restricted cash to cash and cash equivalents due to new accounting standards with some of their merges, such as Whole Foods. To test the risk of material misstatement of these classifications, we want to test for the cash to be readily available and for the cash equivalents to be readily convertible to a known amount of cash. We'll also check for maturity dates on cash equivalents to make sure that the amounts are not affected by interest rates. I'll send you again to Jessica.
So Amazon experienced rapid growth over the past year in 2018. One of the areas that increased significantly was in its service sales section, which includes the computer power business of AWS, which has web hosting and storage sales. It also includes Amazon Marketplace, which is a collection of third-party sellers, properly recording the commissions and the related expenses for the marketplace, both for accuracy and for cutoff, will be an important area to consider. This area is growing within Amazon.com and provides some unique challenges for accurate accounting that are different than other service revenues. Amazon Marketplace is a large and varied segment of the company, and the volume of sellers paying commissions could lead to record-keeping challenges. Finally, we should keep in mind for this audit and for audits in the future that there are competitors to Amazon's service sector. Companies including Google and Microsoft would like to take some of the cloud computing business that Amazon currently offers. With Amazon's recent record valuation of $1 trillion, there's a concern that regulations are also an imminent threat. Thank you for listening.
Thank you.